Hey, good morning, everybody. Today is Monday, February 9th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. We've got a lot to cover today, and so let's get started. What you're looking at is a weekly chart of the Russell 2000 from September 2012 through today. I want to take off the markups on this chart. I want to show you that from November of 2012 through March of 2014, the Russell 2000 advanced 59%. From March of 2014 through the low in October of 2014, the Russell corrected 14.21%. Put our markups back on, and we see that we have resistance at this high in the 1213 area. We've poked up against that high on 1, 2, 3, 4 occasions since March of last year. We are right up against that high again today. We failed on Friday. We have this trend line going from the low through today. We've come to a critical point with the Russell 2000, and I think the Russell 2000 is the key to the bull market going forward here. If we can take out this area of resistance, we probably get a fairly significant move to the upside. If, however, we break down below this trend line, I believe that we have to come back and test support at the prior low in the 1040 area. If we were to break below that 1040 area, I think that it would be over for the bull market, and that perhaps we'd have to endure a fairly prolonged bear market. Let's see what's going on with our NASDAQ Composite. NASDAQ Composite on Friday sold off 20.7 points, or 0.43%. NASDAQ spent most of the day trading in higher territory before succumbing to selling pressure late in the day. Trading volume was higher than the prior day, giving us a distribution day. The definition of a distribution day is a lower close on higher volume. Distribution is an indication of institutional selling, and as you can see on the NASDAQ, we've had quite a bit of institutional selling in the past couple of weeks. Since the market confirmed the uptrend on January 8th, we've had 5 days of institutional selling or distribution. Over that same period of time, we've had just 2 days of accumulation. Accumulation is a higher close on higher trading volume and is an indication of institutional buying. What we're trying to do ultimately at Push Button Stock Trading in our stock portfolios is we're trying to get out ahead of the institutions. So it's very important that we know what the institutions are doing. Over the past month, we've seen a lot more institutional selling than buying. Still, the market's trended higher, and we are coming up against resistance on the NASDAQ in the 4811 area. I'd like to see the market punch through that area, and I'd like to see accumulation pick up on the NASDAQ. Just a note. According to William O'Neill in his book, How to Make Money in Stocks, he says that after a month, accumulation and distribution become meaningless. This first distribution day was January 12th. On February 12th, that distribution day falls away. It's not as important on the NASDAQ as it is on the S&P 500, and we'll talk about that in a little bit. Right now, we are on an aggressive buy signal on our 1 to 6 month timing model. The aggressive buy signal is a new signal that I've just added to the 1 to 6 month timing system. And the reason for that is that the way that we account for a margin signal is if we have a reading above 1 on our RMOSI greater moving average with a buy signal on the market, we go to a margin buy signal. Periodically, we find ourselves in a situation where our RMOSI is positive, but the buy signal on the market is in a neutral position. And so I had to account for that somehow. And so what I've done is I've created an aggressive buy signal. And what an aggressive buy signal means simply is that aggressive traders can add to positions in their portfolio. More conservative traders may want to be a little bit more careful. Right now, the NASDAQ Composite is bracketed by minor support in the 45.67 area and resistance in the 48.11 areas we talked about before. I'd like to see the NASDAQ take out this resistance area. I would certainly become a lot more bullish on the market longer term if we could do that. Let's take a quick look at the S&P 500. The S&P 500 on Friday was down 7.05 points or 0.34%. Like the NASDAQ, the S&P 500 spent most of its day in positive territory before selling off into the close on Friday. You can see that we actually tried to take out minor resistance on the S&P in the 2064 area, but we failed and closed below that level. That is the first key to the S&P 500. After that, we have more significant resistance in the 2094 area, and we really need to take out resistance at 2094 before this market can move significantly higher. Trading volume on Friday was heavier than it was on Thursday, giving us another distribution day. When we looked at the NASDAQ, we talked about distribution days falling away after a month. We have 3 distribution days. This one on January 12th, January 13th, and January 14th, all of which will fall away this week. Right now on the S&P 500, we have 6 distribution days, but at the end of this week, assuming that we have no more distribution this week, that falls off to 3 distribution days. Over that same period of time, over that same month, we've had 1 accumulation day, 2 accumulation days, 3 accumulation days, 4 accumulation days. Our accumulation is beginning to catch up with our distribution. That's a bullish sign for the market and is starting to look a little bit more positive. Right now on the S&P 500, we are also on an aggressive buy signal. Taking a quick look at our MACD histogram on the S&P 500, we see that on Friday, our MACD histogram closed above the 0 line, which is bullish, and that our MACD histogram is trending higher, which also is bullish, which gives us a bullish short-term, our immediate term outlook on the S&P 500. Before we go, I've had a couple of questions from subscribers recently about the MACD histogram, what it is, how it works. If you go to the Start Here section of Push Button Stock Trading, I've posted a new video that explains the MACD and how we use it. If you want to talk about the MACD, about markets in general, about any of our trading strategies, please feel free to give me a call, drop me an email, or if you'd prefer, make an appointment. Come on by the office, see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the home page. If you've not already done so, please take a minute to go to the subscription page and subscribe to Push Button Stock Trading. Finally, please take a quick look at our disclaimer video, which is posted below this one. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I'll see you again tomorrow.